we are seeing a battle play out right before our eyes in Greater Toronto Area real estate. And that battle is between high rates and low inventory. As you can see from the thumbnail, I feel like the scales are tipping in favor of the rates maybe, but let's get into this and I'll show you exactly what I'm talking about. How's it going, everybody? It's me, Rob Marsiglio, sales representative with Keller Williams Referred Urban, out here in Durham region, doing my best to bring you weekly content to keep you up to date. So what is happening with the Greater Toronto Area real estate market? Today is one of my favorite videos of the month. It is my monthly update. So we're going to take a look at the Market Watch data from TRREB that they put out. But first, I want to get into a little bit of rate talk with you. We'll get into it with this tweet here from Ron Butler at Ron Mortgage Guy on Twitter. Great follow for all things mortgage and even more insights on the kind of real estate industry as a whole across Canada. But fixed mortgage rates continue to increase. What's going on? Canada bond yields exceeded their 2022 highs and fixed rate mortgages followed suit. The end result will likely be that a popular term like the 3-year fix, so that kind of shorter term fixed rate, will be in the 6% range. So qualifying will be in the 8% range. And here's what Ron is talking about from Market Watch. This is a look at the Canada 5-year government bond. I took the screenshot at 9:51 on July 6th. I know it had peaked even a little higher than this prior to me taking the screenshot, but as this number grows, so do fixed rate products. Remember, variable rate products are tied to the Bank of Canada's overnight rate. So those rate hikes that we've been seeing from the Bank of Canada have affected that product. But when it comes to the fixed side of things, we're looking at government bonds and what they're doing. So again, expect probably some more increases in the fixed rate mortgage products. It's all well and good to hear that, but what does it mean for you, the consumer, you, the buyer? How have things changed over the past year? And to answer that question, I pulled this chart, our TD 5-year fixed and variable rate history from WOWA. I have the source down here on the bottom, wowa.ca. You can go check it out. And I've just kind of highlighted the variable rate last year, which was a 3.30%. So you were qualifying at 5.3%. That was July 6, 2022. July 6, 2023. So these are posted rates on WOWA, and I know you're more than likely going to pay higher than these rates just to illustrate kind of how affordability has changed. So based on the new 5-year variable right now, you're looking at qualifying at over 8% for a variable product. With a 5-year fixed, you're looking at qualifying at about 7.4%. Now, what I did is I took all this into account, and using the median price point across the entire GTA for a freehold property, I came up with some numbers for you. So July 6, 2022, we were looking at a median price point of $1.12 million. We'll assume we put 20% down in both instances. If you're going fixed at the time, you were looking at 5.14% as a mortgage rate. So you're qualifying at just over 7% at the time. And your monthly mortgage payment on a $1.1 million home would have been just over $5,000 a month. This is just mortgage payment, not taking anything else into account. On the variable side of things, you could get a 3.30% variable rate, and that was coming in just shy of $4,400 a month for that mortgage. A year later, and kind of why this price run up that we saw was so crazy is because, rates are materially higher. The fixed rate side a year later, not too much of a difference, but as we just discussed, that could be trending upwards, more than likely will be trending upwards in the coming days, weeks, maybe months. Your payment was already about $1,000, $900 more on fixed this year than it was last year. And that is because the median price point of a freehold property is up $150,000 from where we were last year. If you're going variable, this jump is just something else, right? We're talking about a 6.7% variable rate mortgage right now for a 5-year variable from TD, according to WOWA. So your payment is getting closer to that $7,000 number. So yeah, you're talking like whatever, $2,600 a month more on a variable payment right now than you were a year ago. So I think it's really clear to see that rates, not again from the thumbnail, the scale, right? Rates really, really weighing down, maybe tipping the balance towards rates. Tighter inventory was propping up prices a little bit potentially, but I think maybe we're seeing signs that rates are going to be taking over, really crushing that affordability, and we'll see what that means for prices going forward. And speaking of prices, our TRREB Market Watch data is finally out on July 6th of 2023. Got some fresh charts for you. Let's jump into that to see what's going on. Here's the tweet from the Toronto Regional Real Estate Board. TRREB urges governments to accelerate action on housing supply as lack of listings leads to tighter GTA market conditions in June. And this is why the whole title of my video and the thumbnail is about inventory versus rates. TRREB is like kind of posturing that, we have tighter conditions in June. Tighter market conditions. When you think tighter conditions, you think maybe increased prices, a little bit more competition for fewer listings. Let's jump in and see exactly what they were talking about. Because they started talking about listings, let's take a look at new resale listings and what they did in June. So what I've done is these numbers here are every single June going back to 2014. And you can see that at 15,865 new listings in June, it's kind of the second slowest month in terms of new listings, going back to 2014. 2019 had fewer listings, 2018 had just more, and like oddly enough, those were our last two maybe normal cyclical years in the real estate market. Anyways, I think the trend here to look at is that you don't see it very often. May to June a drop, May to June a drop, and that continues all the way through until 2020, where we did see a big spike because coming out of the pits of April 2020, COVID, you all remember that. First time that we did see an increase month over month in listings from May to June happened just this month. As for the sales side of the equation, maybe the demand side, so we've already seen that supply, new supply increased from May to June. On the demand side, sales actually dropped. And again, this is not really as surprising. Usually we'll see sales come down a bit from May to June. Maybe they'll go up a little bit. Maybe it's a bit flat. I'd say more times than not, though, we do see sales drop off. The rate at which sales dropped off this year is the second highest going back to 2014. 2017 that saw the biggest drop between May and June. It was about a 17% fall off. So I'm talking in terms of percentage here. But there you go. As you can see, listings were up. Sales were actually down month over month. Now, TRREB's position and the statement that they made in terms of tighter market is that sales ticked up and listings compared to last year ticked down. So that's where they're coming up with the kind of, I think, tighter market narrative. But in terms of a month-to-month market narrative, I would say things loosened up in June versus May 2023. And I think that's highlighted pretty well by active inventory. Again, we don't expect to see a big jump like this in active inventory from May to June. Usually you're starting to see things kind of roll over into normal market and maybe kind of not quite as big of a jump. You would expect it to be kind of similar. Again, 2020 will throw that out as an outlier year. And then last year, a bit of a rollover. Pretty much every other year, it's been coming down a little bit. So a big jump in active inventory from May to June, I'd say, is a little bit outside of the seasonal norms. And that can all be reflected back in months of inventory, which again, on this channel, we love to track it on a weekly basis. Follow me on Twitter. That's where I do post the actual weekly Monday months of inventory update. But here we can see a very significant jump from May to June in months of inventory. And you can either pause the video here or not, but just kind of go back and look at what happens from May to June in a normal year. What I would highlight is that in 2017, big jump from May to June. 2022, big jump from May to June. Those were times that we were going through kind of two of the bigger price corrections in the last little bit in GTA real estate. If we look at it in a different way, we look at it in terms of percent change from month to month. Like I said, you can see that months of inventory is up 43.2% month over month versus 35.8% back in 2017 and 25.6% back in 2022. The caveat here is that it's from a smaller base. The absolute jump in months of inventory maybe not as significant as it was back in 2017, but on a percentage change basis, it is the biggest jump that we've seen going back all the way to the start of our Market Watch data, which was back in 1996. And just for comparison's sake, you can see that we'd expect an average 3.1% increase or a median of 4.3% increase in months of inventory from May to June. Well outside the norm this year. We'll wrap it up with this one. I won't give you the actual average sale price of a property. You'll have to go over to my Twitter feed to find that one in the thread that I did there. But what I do want to highlight is, like we've talked about, the big change in months of inventory month to month correlates. I'm not saying it causes, I'm not saying prices cause it the other way, just correlates nicely to the big drops that we see in average prices. So again, this 43.2% in June 2023 is still kind of well shy of what we saw in April 2017, April 2022, kind of these bigger correction years. But you can see that prices month to month did fall off from May to June. I'll let you go over to my Twitter page, like I said, to see just exactly what happened with those average prices. So there you go, lots of info for you again this week. Like I said, it's a video that I love to do. Absolutely love sharing the data with you. Not to make predictions as to what's happening going forward, just to give you an insight, kind of unbiased, as to what is happening with the market right now. The decision to do whatever you want in the real estate market is yours to make and yours to make alone. If there's anything though that I can do to help you answer those questions, all the contact info is down in the description of this video. With that being said, it is a scorcher out there today. I want to go enjoy some time with my kids. So until we speak again next time, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And, while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.